Hi, I'm Hannah Fitz, brand strategist and business coach at hannahfitz.com. Welcome to this training on structuring your business, the foundations of building a brand. In building your brand, it's very important that you take care of the structural aspects of your business. So I wanted to do this training just to give you some insights on some of the various business structures available. I want you to note that this training does not constitute legal or accounting advice, and I highly recommend that you book an appointment with a qualified attorney or accountant who can guide you through the process of selecting the business structure that is right for you and the country that you live in. Right? So we're going to go through, just for your awareness, the various structures that are available. So let's go through structuring your signature brand. There are 3 structures that are available to business owners globally, no matter where you are. They may be called different things, but it's essentially the same. Sole proprietorship is one structure, limited liability company, and partnerships. So I'll go through each one in turn and explain to you the advantages and disadvantages of each one. Under the British structure, you have what is called sole proprietorship, partnership, limited liability company, and typically these end in LTD, limited, or Inc., right? INC. And then there's this new structure called the limited liability partnership, which is the LLP. Typically, these are used by large law firms and accounting practices, companies within the financial sector. And so for the purpose of the small business owner who's creating a coaching or consulting business, it probably may not initially be necessary to go in depth with this structure. So I'm going to focus on the sole proprietorship, partnership, and limited liability company. Under the American structure, you still have the sole proprietorship, you have the LLC, the C corporation, and the S corporation. And I'm going to explain some of the differences between those as well, so that you understand maybe what the advantages are. But of course, it is a wise idea to speak to your accountant and your lawyer to get more in-depth and accurate information on the subject. So a sole trader, as it's called in some places, or proprietor, the advantages of this structure is that there's very little cost to start up in terms of legal cost. In some countries, all that's required is that you register with your Inland Revenue as a self-employed person, or that you register a business name. And so this is a very quick process. There's no financial reporting obligation annually, and so there's no need to present any annual reports like a balance sheet or profit and loss statement, and there's no red tape. A lot of small businesses tend to start with this. It's not my very favorite structure, and I'll explain why in this training. The sole trader, some of the disadvantages is that there's no distinction between the business and the owner. It's regarded as the same. So whatever the business, whatever debt or revenue the business incurs, it becomes the owner's responsibility. It's your responsibility. And so the other disadvantage coming out of this lack of distinction between the owner and the business is the fact that you have unlimited liability. Now, that's why it's not my favorite structure, because when you have unlimited liability, it means that you're risking also your personal assets as a business owner. Whatever debts your business incurs, or whatever liabilities, like say there's a lawsuit or something to that extent, it becomes your personal responsibility, and the law will go even into your personal wealth to recover whatever debt that the business is liable for. And so the liability is unlimited and extends even into your personal assets. All business profits are also taxed as personal income, which means that, in many countries, personal income tax is scaled. And so it increases as your income increases. And this is a major disadvantage of the sole trader type of business. And of course, also, there aren't as many, provisions and allowances that a company would have that you'll see later when we talk about this area. In the limited liability company, or what we call an incorporated structure, where you'd have those LTDs, LLCs, limited, or Incs. The biggest advantage is that there's a legal feature that recognizes the company as a separate legal entity. And this is very important. It means that in the eyes of the law, your company is almost seen as a separate person, which has its own responsibilities and duties. And that is an important structure that makes incorporation so favorable and so appealing to many business owners. Because of this separate legal entity feature, you have limited liability, which means that there's almost this like invisible shield between you and the company. The law separates your personal assets from the company's assets. And so in the case of the company, incurring any debts or going through any liability, like any legal issues or lawsuits, the law will not go after your personal assets unless, there's some major bad faith issue that needs to, where they would do something called look behind the veil. But of course, your attorney can explain these details a lot better. What I would say is that the limited liability aspect is very important, because you always want to ensure that your personal assets do not become commingled in the business assets for your own protection. And so that is one of the most favorable features of a limited liability company. And so again, it's protecting your personal wealth and separating your assets. The other feature is that, some large companies will only do business with small businesses that are incorporated. And it's only because, they don't want to go through the legal trouble that comes through, the business owner being personally liable and all the other factors, that can occur. Having that shield of protection also gives them that safety in doing transactions with you. And it shows more formality. It shows that this business is established. And so it really does, from a reputation standpoint, give more structure and a better image for your brand, right? The other aspect is that, grant organizations tend to prefer to give grants to registered companies. And I've worked on a number of grant-related projects, EU-related projects, and it tends to be part of the criteria for applying for grants. So if you want to open up your business for the opportunities to benefit from grants and funding, it is a good idea to incorporate. It's also very attractive to investors. So if you're looking at bringing on board potential investors or venture capitalists, and that might come maybe if you're looking to grow your business or expand, having an incorporated company is important. I know in the United States, this is why there's an important distinction between an LLC and a C corporation. The C corporation, as opposed to the LLC, though both are limited liability companies, the C corporation allows you to bring on board venture capitals because you can issue shares, right? And then there's the aspect of, you're no longer, right now, you're no longer required by law to have a separate company secretary. And that was part of the hindrance for a lot of small business owners, because of that administrative obligation in the past of having to bring on board a company secretary and an additional director. It was unattractive, but laws have changed, and many jurisdictions, many countries allow you to incorporate a company as a sole director and an operator of this company. So that's a very good feature that's appealing to a lot of small business owners. The other aspect is that there are several allowances that may not be available to sole proprietors that can be passed through as company expenses, and these vary by country. And of course, your accountant would be able to give you a lot more details on what some of these allowances are for your area. Most countries have a fixed tax rate for corporations, and your company is taxed separate from your personal taxes, which means that you're not getting that increasing tax as your income increases as a personal, for your personal income tax filing. And so you would have to file separately for your company. The other advantage is that, in some companies, capital gains are tax-free. Now, I know that in the US, this is not so. which is why a lot of small business owners prefer to form a LLC, because there's a feature of the LLC which is different from the C corporation, which allows something called a pass-through, which means that the company's profits can be passed through to the owner. With the LLC, this is a great feature because it means that you're avoiding double taxation on your income. And so all the company's profits are now taxed personally. And so this is a great feature for people who want to avoid double taxation. With the C Corp, it means that you would be taxed corporate taxes, and then whatever dividends that you would pay yourself as a shareholder of your company would be taxed again in those jurisdictions. But again, as I said, your accountant can clarify this in greater detail, and it's just a great idea to get, the professional guidance when you're setting up the structure of your business. Right, so these are some of the advantages. The disadvantage of incorporating, which a lot of people find, small business owners find, a bit troublesome, is the administrative duties and the yearly obligation to file taxes and have your accountant file your annual reports, which include like balance sheets and profit and loss statements. It really is up to you what structure you decide to undertake for your business. Definitely, there are a lot of advantages for incorporating your business, and that includes the tax benefit of a fixed tax rate, and my favorite of all feature, which is the limited liability aspect. So I wish you all the best. Set your appointment with your lawyer and attorney. It is a great idea for you to really have proper guidance, and you'll need an accountant anyway to really guide you through the process and manage your affairs in your business. So I wish you all the best on your journey to creating your signature brand.